Yeah, welcome back. Still Business Incorporated on Channels Television. We'll head to the markets now for intraday numbers with Aniti Edet. And Aniti, this is very close. I mean, the number, it's green, but it's so close at 0.01%. I wonder what has happened between when you got these numbers and even as we speak, not to mention when the markets will close today.
Well, this was gotten about an hour ago, and I think I last checked the market just about 15 minutes ago, and it's still upholding that green. And so far, month to date, it is 1.3%. You took the market yesterday, you gave this number. And then year to date, it is still in the positive terrain. It's even crossing to the 32,000% level. So
Okay.
year to date,
So we're still safe.
Exactly. It's almost close to the level of inflation, Nigeria's stock market. And in terms of ranking, which we'll be looking at how Nigeria's stock market has fared against its global peers. So far, if you rank Nigeria's stock market around the global rivals, it will still be in the top 20, if not top 30.
Of best performance. Let's head to
top is where it belongs, and
exactly.
Definitely take a look at it here. Nigeria's stock market, it has been able to sustain the rebound which we made all the way from Tuesday, Wednesday, and Thursday. So last track of it, the 98,000 points is still very much there, sustained, and we're looking at next week. Most of the markets will be trading fully before it goes into a holiday mode, which will be on the 24th of December. That's just about a week and a half away from now. But so far, Nigeria's stock market has gained 0.01% and still holding on to that 98,000 points. But for the Johannesburg Stock Exchange, it was down by 0.31% at intraday. The number also fell all the way from 87,000 points, which we saw yesterday, to about 86,692.88 for the intraday market numbers. So we'll be looking out for how that market will end the close of Friday's trading session. And for the other markets there, so it was a fairly mixed picture for four of the major markets that we track across the African continent there. EGX 30, 0.18% up intraday. And that 30,000 level of the market, well, still not anywhere going upwards or downwards, just oscillating in between this level here, 30,795.09. But for the Nairobi Stock Exchange, it was another pullback. We were hoping that the market will cross into 120, but alas, it's down by 0.70% for the close of Thursday's trading session at 118.49, as you can see on the screen there. So that's it for the markets on the African continent. Now we switch pace from equities into the domestic fixed income markets, where we are reviewing how the week has so far been for the country's fixed income markets, talking about treasury bills, talking about the OMO auction, and also talking about the bond, which we see that the circular has just been released by the Debt Management Office. And we have our analyst for today, Ayomide Odesonya, to tell us more about this, how the week has been for investors, and then what to expect in the week ahead of the Christmas break. Thank you for joining us, Ayomide.
Yeah, hi, Anete. Good afternoon.
Okay.
I mean, the week has been quite eventful in the fixed income space. We had an OMO auction on Monday, and this was after, the upper week where we had one OMO auction on Friday. At the OMO auction, two long tenor bills were offered. So we had the 351-day and the 365-day OMO bill. I think they sold about 489 billion on the 351-day bill against the 300 billion on offer at 23.95, and sold about 1.07 trillion on the 365-day bill against the 300 billion on offer at 23.98. On Wednesday, we also had the Treasury bill auction, where they sold about 28.8 billion as against the 274.6 billion on offer. We saw the 91-day bill close around 18%, the 182-day bill close at 18.5%, and the 364-day bill close at 22.8%. The previous week, we had another NTB auction that closed at 22.93. So even though we're seeing more volumes, we're also seeing, the rates decline in the NTB space. So I mean, what we've actually seen a lot of supply just this week to the markets.
Okay. So now, I'm very curious about this. I just got a report that the yield on the one-year Treasury bills has dipped further, and this is because the Debt Management Office is trying to manage its borrowing costs. So, but how is investor sentiment towards the other instruments within the Treasury bills market?
Yes. So as I mentioned, I mean, the Treasury bill auction this week closed at 22.8%. About 2 weeks ago, it was actually, that's a discount, closed at 22.8. About 2 weeks ago, about two auctions ago, the bill closed at, the 1 year bill closed at 23.5%. So, I mean, there's been a significant drop. However, I'm not sure it's a thing of, the Debt Management Office managing. It's just more of a demand situation. So, we've seen, we had about, on the 1 year bill, we had about 888 billion subscription, right? And it was just about 250 billion on offer on that 1 year bill. So it's more of a demand thing. So, I mean, investor sentiments generally, we've seen a lot of appetite for both foreign and domestic securities. So, I mean, on the Eurobond space, we saw how, there was about 202 billion on offer, and subscription was over 9 billion. Even this week, with markets even being in a negative, I mean, the week opened negative. Today, I think we're currently at about 1.5 trillion negative, right? Even with that, we're still seeing a lot of subscriptions, right? As of yesterday, market was negative about 1.2 trillion, and there was an OMO auction. Sorry, on Wednesday, there was an OMO auction, and it was still oversubscribed. So it's the yield dropping is more of the appetite that we're seeing in market. So there's a lot of demand, right? And that has drawn yields lower.
Okay, so that's for this week. And next week is going to be the final full week of trading, because by the Christmas time, we'll be having just about 2 days, 3 days active. But give us a glimpse of what to expect from next week. What is the investment sentiment would be like, and what are we to expect?
Okay, yeah. Well, next week on Monday, we have the bond auction. The circular was released this week. There's about 120 billion offered across two securities, the 2029 and the 2031. So 60 billion on each. I do believe that we're going to see, significant interest. However, the last auction had closed at about 22% on the 2031 and 21% on the 2029. And for whatever reason, market has been, we've not seen, significant move until maybe today, where, we started to see yields trade slightly higher. So, I mean, on Monday, I do believe that, this demand would still, we've not seen a lot of demand on bonds, basically. So it will be interesting to see, how people will bid on the at the auction on Monday. And I mean, there's also the FAC payments that we expect to come in next week. So I mean, most times, for the Yuletide season, FAC is paid slightly earlier, right? Just before the holidays. So I expect that, maybe next week we should see FAC coming in. So with that liquidity coming in, there's also a promissory note maturity. There's some coupon payments as well. We should see some liquidity coming, maybe not to cover for, the negative. So I feel that might further even push demand, right? So we might just see, even more demand coming next week for majorly bills, and then I think some on bonds as well.
Okay, Ayomide, I think we'll leave it there, and then, of course, keep our eyes out for investors, and particularly the FAC. That will be the FAC for the month of November. So thank you so much for your analysis on the show, and we hope to see you next time.
Thank you.
That was Ayomide Odeson, a fixed income dealer with FSDH Merchant Bank, giving us details about the fixed income market, what to expect for next week, and of course a review of what happened at the market this week. Okay, so from Africa, as usual, we move over to the Middle East, where the Dubai and the Abu Dhabi indexes, a third straight day now, this market has been able to hold on to the gains which initially was removed due to uncertainty over the conflict within Syria. And like I mentioned in the previous session, the uncertainty within the Middle Eastern region, where we still see the Israeli war with Hezbollah, although there's a ceasefire there. But so far, the market has been able to hold on to the greens there. 0.36% for the Dubai index, 4,828.77, and 0.07% intraday uptick for the Abu Dhabi index, 9,282.43 for that market. And for the Saudi Arabia and the Qatari Stock Exchange, 0.41% for the Tadawul 12,000. That market has already crossed into the 12,000 points there. And the Qatari Stock Exchange for the close of Thursday's trading session, 0.17%. So for Thursday, it was green. And for intraday, it was also green for the markets that we see on the Middle East region. And from the Middle East, let's fly over to the United States, where we see major averages climbing after Thursday's downbeat close. We saw both the three averages there, they were in the red, and this is after the hotter than expected producer price index, which of course gauges wholesale inflation. It climbed by to 0.4%, up from what was expected at about 0.2%. That's quite higher than economists had expected. But for the ahead of the opening bell, the Dow Jones Industrial Average, which has fallen for about a 6 consecutive session, is pointing upwards earlier in US before the opening bell, 44,063.00, up by 0.20%. S&P 500, 0.26%, while the Nasdaq is down by 0.57%, no thanks to losses from the likes of Nvidia and some other tech stocks. But now, for the week, the Dow is heading for about 1.6%. S&P is on pace for 0.6% drop, while the Nasdaq has outperformed and is on track for a 0.2% advance for the period. Friday is also marking a light day for economic data. What we're expecting, import and export data would be due out later today. But for a review of Thursday's trading session, let's bring in our Washington correspondent, Myra Bird.
The U.S. stock market had a challenging day, despite the fact that President-elect Trump rang the opening bell. Many investors are a bit concerned about the inflation reports. It is indications that there could be no interest rate cuts before the end of the year, as the Dow Jones had its longest losing streak since April, closing at 0.53% down. And the S&P 500 also closed down at 0.54%. The Nasdaq led the way in losses at 0.66%. Many investors are a bit concerned and watching to see what will happen over the next few weeks before the end of the calendar year.
Our Washington correspondent, Maria Bird, giving us details of how Wall Street ended Thursday's trading session. Okay, so now take a look at your board there. Asian markets, well, China was actually the leader of mostly negative sentiment that we see here for the close of Friday's trading session. The Nikkei was unchanged, and then we also saw the Tankan survey of manufacturers, which largely boosted investors' confidence there, but it was slightly unchanged. And Kospi has been able to make some gains, so fairly mostly a negative picture there for most of the markets around the Asian region for the close of Friday's trading session.
All right, Nisha, thank you so much for that.
Pleasure.